There are currently over 1,000 companies listed on Bursa Malaysia. Of that, roughly around half trade at a discount to their net tangible assets, or NTA. But what does this mean? And why does it matter?
So NTA is one measure that investors can use to look at whether a company is undervalued or not when you compare to the share price of the company. So the higher the NTA, it shows that there are more assets, tangible assets that the company has, as opposed to one with a lower NTA. So the bigger the difference between the share price and the net tangible asset, the NTA, it just is one way of measuring the wider the discount that the company has is trading on the market.
While there are many methodologies on how to value an entity, an NTA can be considered a way to measure the actual value of a company, deducting the liabilities and intangible assets, leaving behind physical assets, be it land, buildings, or cash. Of the many companies listed in the story, Lee says two in particular stand out, but for very different reasons.
So in this story, one of the companies that we featured was Malfa International Berhad. It's a property developer which also have investment assets and like some hospitality assets. So we picked this company because we found it interesting that this company is largely, most of the assets are in Australia, and it is in, I would say, popular places in Australia like New South Wales, Victoria, and also Queensland. So they have a good portfolio of property development, very interesting hospitality assets as well as property investments that's like located right in the CBD of Australia, of Sydney. So their NTA per share is 10 ringgit and 96 cents, whereas their share price at the time when we were doing this story on May 14 was 3 ringgit and 14 cents. So the discount is actually quite wide. It's about 7 ringgit and 82 cents. So I guess there's room for the share price to appreciate. So the second company that we picked, I guess it's no secret that is DRB Highcom Berhad. So as many would know, this company is a conglomerate. It has a wide range of assets. Not just in the automotive sector, it also has Post Malaysia, also owns Post Malaysia, 53% of Post Malaysia, and also Puspacom. So this company has been undervalued, I guess, for a long time. If we were to look at their NTA, it's 2 ringgit 99 cents, whereas their share price is below 1 ringgit, at 92 cents. As of May 14.
So the million ringgit question is this: is a huge discount to NTA an indication that a company is undervalued?
So the thing about NTA is it really depends, right? Like with assets, it depends on how the management decides to sweat the assets. So then that's where the value can emerge. But if management does not do anything about it, the company will remain as such undervalued.